Tell us first off what happened. Why was the street's estimate so low? Why did the bank beat it by so much?
Well, first let me say that what we saw in the first quarter is something that we've talked about for the last 4 years, which is the diversification benefit of a universal banking model. For sure, the corporate investment bank had a strong first quarter led by the markets business and the investment bank. But, the consumer bank had both the U.S. and the U.K. Had its challenges because of the pandemic and what we're seeing in the economy. I think in the markets business, we have stayed invested over the last 4 years across all the asset classes. I think we stayed very engaged with our clients. The performance was very much driven by the volume of securities that we were trading with our clients. It was not based on any particular position or direction that we had going into it. So we feel very comfortable about it. And as we've also said in our press release, the beginning parts of April were also much higher than what we saw in the second quarter of last year. So we feel very good about the number. It's a lot of dedication of people in that business, and it allowed us to weather a significant impairment reserve that we took in the first quarter, and still generate a 5% ROTE. And it was good to see the CIB in a double-digit level of profitability.
And so good morning to you, Jes. That's the CIB part of the story. On the rest of the business, the level of provisions that you're taking, or that you've had to take in the last quarter, Jes, what kind of visibility do you have as to the trajectory of those provisions against credit losses that you'll have to make, I assume, once again into the second quarter?
What we did was, so our provision overall for impairment in the first quarter was £2.1 billion. Of that, £1.4 billion was basically what we think might happen to our consumer and corporate credit business if we had a very difficult economic scenario play out for the rest of the year. So we take forecasts around unemployment. For instance, the unemployment forecast we used for the U.S. was 17%. We take a GDP reduction, which was quite severe in the forecast for the second and third quarter, and you run those forecasts through your credit models, and the models punch out a £1.4 billion reserve. So if the economy is that tough and unemployment goes that high, we've reserved for what we anticipate the credit losses to be. If, because of the government response, which is so robust around the world, starts to mitigate the contraction in the economy, then that will free up reserves later on. So we think we have been prudent, but it shows, given the inherent profitability of the bank, that we can take a reserve like that and still make some £600 million of after-tax profit.
Jes, I think a lot of people are focused on, concerned about the health of SMEs, consumers, and small and medium-sized enterprises. What kind of demand are you seeing from loans from SMEs? And I suppose you've got to throw in your big credit card business there as well, because obviously a lot of small businesses bootstrap their expenses with credit cards. And how helpful have government programs been in helping you to meet that demand?
Yeah, I think the thing that we're really living with is the strain and stress that's being put on the consumer and the small businesses and the self-employed. It really is difficult to watch. So we're doing things like, we have given payment holidays to some 238,000 consumer and small business clients of the bank to try to ease that pain. But what we're seeing in terms of demand for credit actually is less, because people are they've stopped spending, and they are trying to preserve cash and hold on for a recovery. So actually the demand on our credit at the small level is not what you would expect it to be, but we've kept all of our lines open. We are extending credit where they want to. But what has started to work is the incredible programs by the government, and for us it's here in the UK of extending low-interest, long-term credit is beginning to work, transmitted through the banks, where in the case of what's called the civil program, we take our skin in the game is about 20%. We've done some 3,700 mortgages or loans through that program like that, about 737 million pounds to small businesses in the UK. So the governments, I think, are putting a lot at it. I think it's just begun. But we all need to preserve our financial integrity, because these companies are going to need help when the economy opens up and they can start to hopefully bring furloughed employees back in and start their shops and their stores and their restaurants. And we're all going to need to do our part to get that part of the economy re-engaged, or this will be a really tragic economic crisis.
Yes, really interesting to get your assessment of how things are progressing on that front. In terms of the way you run the balance sheet of the business then, Jes, you've said you're comfortable operating below the stated CET1 target level. How long will you be comfortable doing that for, and how low could you go?
You know, we want to, first and foremost, we need to maintain the financial integrity of the bank. And I feel good about the fact that we walked into this quarter with the highest level of capitalization in the history of Barclays. But we realize that we've got a commitment to provide credit to our consumers and customers and corporate clients. And, you know, we have, for the UK alone, some 40 billion pounds of advised credit lines to help UK corporates if they need it. And we manage the balance sheet to make sure that we can fund those loans if, in fact, the corporates ask for them. So, we need to keep the bank financially strong to stay open. We will let our CET1 ratio drift down. I think the governments are doing quite a bit to make sure that we feel that we have some relaxation on capital. We do face the challenge that in the regulatory environment now, our calculation of our risk-weighted assets, which is the opposite side of your capital to calculate your capital ratios, do inflate as volatility goes up and as credit ratings go down. So we've got to manage through the inflation of our risk-weighted assets at the same time that we keep the capacity to lend when people want to borrow, but to ensure that this bank stays strong and solvent, which is why, again, that impairment number is so prudent, because it demonstrates that we've got the capacity to take losses and to keep a strong capital level.
Are you going to be able to keep your bankers on and keep paying them, Jes? Do you expect bonuses to continue to remain in line with expectations?
You know, I think there's a real chance that we recognize the banks were in part the catalyst for the financial crisis in 2008 and 2009 and the economic crisis that ensued. We've got a chance now where the banks could be a firewall against this economic crisis created by this horrific medical crisis. I've been amazed by how our bankers, both the consumer side and retail and wholesale side, have reacted. 80% of the people who man our call centers across the UK have come into work every day to take just a tsunami of calls coming in to those call centers. 655 of our branches are open across the UK. And think of all the social distancing issues and concern issues. Where I live in London, there are 3 stores that are open. There's a small shopping store that's open. The pharmacy, as a friend of mine, is open, and the Barclays branch and the branch bankers are there every single day. And then our traders have been open as well. We have 2 trading centers in New York, 2 in London. So I think our people are doing their part to make sure that bank is a critical component of how this economy is functioning today and how we recover.